Good morning, everybody. We'll kick off in 2 minutes. Kick off in 2 minutes. Thank you.
Okay, good morning, everybody, and welcome to the Gulf Intelligence Daily Energy Markets Forum webinar, where every morning we take a stock of markets opening in Asia and where they could travel through the day. Let's kick off in Singapore this morning with our regular commentator, Vandana Hari, CEO of Vanda Insights. Vanda, good morning to you. The markets are climbing a little bit today. What's the latest from your perspective?
Good morning, good afternoon from Singapore to you and to all our participants in this webinar. Look, the countries have just started giving the COVID vaccine shots. So we've had UK, I understand Bahrain, and Canada is soon going to be the third in the line, possibly starting as early as this week. But I was just thinking, if you look at the oil market, seems like the oil complex has already been immunized against COVID. I mean, I can't help but come to that conclusion because it's not like there aren't bearish factors on the scene. And what bigger example than the EIA data last night, 15 million barrels jump in crude stocks. Nearly more than 9 million barrels in all between distillates and gasoline that got added to stockpiles as well. And yet we had WTI settle, 8 cents below the day before. And this morning in Asia, both have been rising again. Well, admittedly, not a huge rally, but Brent somewhere around 49, WTI around 47 or so, a little bit lower now. Not too far from their 9-month highs. So, I can only surmise that the oil market has become, the COVID vaccine has become the North Star for the oil market. Let me put it that way. And a market that is notorious for short-termism, for looking just at the here and now, is behaving completely differently now. It's looking nowhere but in the distant future with optimism because of the vaccines.
Vladimir Langhamer, sitting in London, Managing Director, Supply and Trading with OMV. Vladimir, is Vandana right? It does strike me that with 3,000 people dying yesterday in the United States with COVID-related illnesses, and the other 15 million barrels a day and so forth, ultimately, it looks like the oil markets are past COVID. COVID is in the rearview mirror in terms of the financial markets. Your thoughts, Vladimir? You're on mute, by the way. Perhaps you can unmute.
Good morning. Good morning, everyone from Chile, London. Yeah, I've been saying even last time, I think the oil markets want to be long. They want to be bullish, and as Vandana said, now, I mean, they're looking at the good news. The vaccine is certainly one of the good news, but it's going to take time to really filter through, and where it needs to filter through is to demand. and demand is certainly not picking up. But I think there are more elements into the price where we are. I think one of them is certainly the US dollars. I mean, US dollar has climbed over the month from kind of 116 to 120, 121. If you look at it against euro. So that's one. Second is certainly, I think OPEC has done, again, I think a good job with managing the price and price expectations. And also what it seems, at least in between the lines, what they're saying is they're not going to manage it on a monthly basis. So basically, every month they're going to look at the fundamentals, the balances, and try to manage the price. So oil has become, I believe, more investable in a sense with less volatility, and that might have attracted some of the financial investors, and they might have pushed the futures to where they are.
Robin Mills, CEO of Qamar Energy. Good morning, Robin. Should OPEC now, in retrospect, have gone further and just said, to hell with it, we're going out our 2 million barrels because this market's nuts anyway, and the vaccine trumps everything?
Yeah, look, Sean, we discussed this last week, of course, and I think we were kind of a little bit ahead of the OPEC decision and thinking it would be some kind of a compromise, which is what came out in the end. And to me, that still makes sense, just because there is this disconnect between the bullish, slightly longer term story, which is vaccines rolled out to the whole world and we're all flying again and the economy is back to normal, and the pretty bearish short term story, which is very fast rising infections in the US and many parts of Europe, and renewed lockdowns and still a lot of headwinds for demand. And we saw this very, very sharp rise in US inventories, of course. I think OPEC was right to be a bit cautious and to give themselves this month-by-month policy. And if vaccines are being successful and people are active again in January and February, OPEC can be adding oil to the market at that point. And if it's not, and if it needs to hold off a few more months, they have that option too. I think in this very volatile and uncertain recovery period, the month-by-month makes sense, rather than trying to manage this on a quarterly basis.
I mean, in terms, Vandana, on tangible demand increase, I was listening on the local radio this morning, the CEO of Dubai Airports, who was being interviewed about the expecting traffic for December. And he had said that they're expecting by bookings, not by forecast, but by bookings, 3 million travelers through the Dubai airport in the month of December, which is well below the 8.5 million, which was the case last December, but it's triple what it was in October. So there is clearly some tangible recovery underway, well ahead of vaccine.
Without doubt, Sean. And if you look generally across the Asian region, I mean, we've been discussing on your show as well, China has been pretty close to pre-COVID levels for a few months now, pretty much through the third quarter. India, the third largest oil consumer in the world, second largest here in Asia, after China, has also almost limped back. It was a bit late, but almost back there to pre-COVID levels. In general, if you take a bird's eye view of Asia, of course, there's hotspots, and I'll get to that in a minute, but hotspots of COVID. But by and large, the region has avoided the fate of Europe and the US in terms of second and third waves. So one can only conclude that the economic recovery and the oil demand recovery in this region will continue to, on a fairly, let's call it a 45-degree slope back to normalcy. We are seeing outbreaks in Japan, in South Korea, Hong Kong, but these are not any longer the major contributors. Certainly, Japan and Korea are not the major contributors of demand growth. So, one tends to look at what's happening in China and India, and that's certainly a positive picture. Just very quickly on jet fuel demand, I see slightly different trajectories. I don't think jet as such is one big picture for globally. So just across this region, if you look at big countries like China, India, big landmass, a lot of domestic travel, whether for business or for leisure. I think the jet demand will pick up. It has to, and especially as vaccines roll out in China and India as well. It's not just going to happen in Europe and the US. However, like you mentioned Dubai, Singapore, some of the countries which depend more on international travel, incoming and as well as outgoing, I think they will probably continue to see a very depressed jet fuel demand.
It certainly strikes me, Vladimir, that people on a personal level, a social level, are more than comfortable getting back on airplanes. Perhaps businesses won't be funding business class flights anytime soon, but in terms of, I want to go on my holidays, I'm getting on a plane, that seems to be something that people are relatively comfortable with. But one point, Vladimir, I wanted to ask you about is the market's view on sentiment. There was two issues this week that I thought would bring some sense of reconsideration in terms of the vaccine euphoria. And that was in the US, the story in which they acknowledged that they had ordered far too few of the Pfizer drugs. And in the UK yesterday, we had an announcement that people with some version of allergies couldn't take the Pfizer. So this is the beginning of the, reality is also here, but the market totally disregarded those two things, which could be quite significant for demand impact as you go forward. Your thoughts on that?
Yeah, look, I think it's very important, obviously, that the governments manage the expectations from the vaccine on both, to the upside and to the downside, because this is nothing that's going to be over by in a week. But on the other hand, okay, we have the Pfizer, vaccine, but there are a couple of others coming up. So my thoughts on that is, I think there's going to be actually enough vaccines to roll out relatively massive vaccination programs. And once they are there, it could be then, within 1-2 months, a substantial part of the population in some of the countries are vaccinated and are immune. And I think that's what's going to bring the difference.
We're actually going to have, with the way celebrities are doing photographs of injections, we're actually going to have our celebrity Omar Najia, the BB Energy, next week, a photograph taking the Chinese vaccine, which has been sanctioned here in Dubai. And I know he will be the first in the queue for that. So we're quite excited to have photographs of Omar taking the Chinese vaccine next week. So stay tuned for that. That'll be the Christmas present for everybody. But Vladimir...
If Omar's getting the Chinese though, Sean, who gets Sputnik 5?
Well, we have yet to assign that. If there's any volunteers, put your hands up. But Vladimir, Libya continues to perform very well. We have a story today on our digest, 1.3 million, 4 million. Mm-hmm. What's your thoughts on the sustainability of the Libyan production levels?
I think, at those levels, they're very sustainable, unless there comes to kind of fallout of the discussions and of the two fractions, obviously. I think they are very sustainable and they're here to stay. I've said last time, yes, they can go even higher, but I think the rate of increase will obviously flatten out because it's going to be more difficult to bring in. But I'm certainly think at this level this is sustainable, and I hope that actually with the funds that now flow into Libya and with the recovery and reconstruction that can again start, actually this is the beginning of a long journey that hopefully will not be interrupted again with internal politics. But
how fragile are the politics? There has been some murmurs over the last week, who's going to get which money, and there was a vessel with maybe arms that was caught coming ashore from Turkey, I believe. Are we still in a very sensitive, fractured state there?
Absolutely. Very, very sensitive, because obviously this, there's a lot of countries that are of interest in that in Libya. And there's a lot of participants that you always have to bring to the tables, and if one of them kind of doesn't play along, then obviously you have a situation where it all can break out. But to be honest, from what I'm reading at the moment, yes, there are incidents. There are always incidents. but there were no major incidents in the sense of somebody saying, we're walking out of the room or I have a faith that actually this time around, this is here to stay for at least, for kind of midterm at least, if not longer.
Yeah. Robin, speaking of fractures, the OPEC supply group obviously indicated last week that there was fractures in the group because of the nature of how long it took to come to a consensus. How do you think that works its way going forward? Does it remain? Is it resolved? What would be your outlook for that into the new year?
Well, I think that tensions they were nothing like as bad as back in March, April, when we had that brief price war between Russia and Saudi Arabia. However, look, I think these tensions are going to grow because there are some clear divisions within the organization over the future path. And there are some members who have the ability to increase production significantly. And then there are, several others who don't or who don't want to. And you've always seen, Russia always kind of strains at the agreement and under complies a little bit, I think, just to show that it's how important it is. But Russia would want to increase production when it can. But the interesting one, obviously, was the UAE. The UAE is producing well below its capacity, and its capacity is continuing to grow. The UAE has a pretty clear path to 2030 to increase capacity very significantly, and wants to make use of that naturally. And I think has a view that it's time to start accelerating the monetization of its reserves. And then there are some other OPEC members who can't do that. And then you've got others like Iraq, which certainly has the oil in the ground and has the plans, but does it have the government capacity and the financing to increase production significantly? So that we will see these tensions. And Sean, I've argued for a while that OPEC should be quite aggressive in regaining its market share as fast as it can post coronavirus. Not at any cost, but it still should. I think it should err on the side of regaining market share. But there are some other members who prefer to see a high price in the short term, even at the cost of that market share.
I was speaking to a source yesterday in a producing country, without stating too much transparency on it, but ultimately the message was, we're pumping as much as we can. If OPEC countries start down that pathway, where does this go and how quickly would that unravel, do you think, potentially, given the 50 plus barrels, that $50 plus price range that we could be moving into?
Yeah, well, it would unravel extremely fast. And if everybody pumps at maximum, we certainly won't be at $50.
Yeah.
We'll see another price crash. Demand is still not, nowhere near recovered. And even with the vaccines, I think, look, you see most of the forecasts are saying we won't be back at 2019 levels until 2022. Possibly beyond. There's probably a long-term effect of this, of the pandemic, in terms of slower economic growth and changing patterns of work and travel and so on. No, there's going to have to be some kind of production restraint. And if you look at the original OPEC plan, they would still have 5.8 million barrels per day of cuts by April 2022. And then, presumably they're not going to put 5.8 million barrels a day back on the market in a single month. So they would still need some kind of phased program beyond that. Now, this idea of adding 500,000 barrels per day each month, as they're going to do, or at least they can do as they assess the market each month through to April. If they carried on doing that, if they added 500,000 every single month from then on, they would have worked off that 5.8 million of cuts. They would have worked off all of the cuts by April 2022. Now, I don't think the path will be anything like that smooth, but that is a kind of a plausible path to get them back to the situation of late 2019.
Well, I suppose when you look at some of the countries that have got away with not complying and it keeps getting pushed, those countries that have been complying, it's probably their turn maybe to do a little cheating. Maybe that's what we'll see in the new year. Vanda, a lot of all of this depends on continued positive demand signs out of Asia. China, on some levels, still very positive. The buying is still strong, up 1 million barrels November over October. But there are still opaque nature to Chinese data. Is there any concerns at all that what we're seeing from China is indeed accurate and one can bank it?
I don't think the market will ever really be able to completely put aside its doubts about almost all Chinese data, right? Not just oil. Not to mention, we don't know officially how much of either strategic or commercial oil stocks that the country really has. But there are other signs in the market. So it's not just completely the bullishness, if you will. It's not just completely reliant on data on China. If you look at floating storage, that has been coming off quite sharply, and that's again quite transparently discovered data. And then you have obviously physical barrels that are being traded in the market. Then you have things like Brent, Oman, Dubai have been in backwardation for a few weeks. Brent is back in backwardation as well. So it's not solely hinged on Chinese data. That's the point I would make. If I may just add very quickly to what you were discussing with Robin earlier, I think there is a very real danger that there might be a sort of sentiment within OPEC that hey, we are starting to ease. That means there is room for everyone to put more barrels into the market. And quite interestingly, I noticed Platts' survey of November data shows Saudi Arabia actually pumped just a little bit above its quota, which is very, very unusual, very rare for the kingdom to do. But it was almost neck and neck with Russia. Both of them, of course, have exactly the same quota, and both of them pumped just above 9 million barrels per day. And then we were discussing again here in your program as well about the UAE's demand. Remember, that week nobody could talk of anything but how the UAE was insisting that the laggards be held to account. And what has happened to that? It's just gone out of the headlines.
Well, it keeps getting that sort of push to the next quarter thing. It doesn't seem, it's the big stick that never gets used ultimately, because what can it do? It can threaten, but ultimately the only option is the nuclear option. And obviously no one's willing to do that. Vladimir, we barely mentioned the fact that US inventories grew by 15 million barrels a day, or 15 million, not a day, but 15 million barrels in the reporting yesterday by the EIA. Any other day of the week and any other month of any other year, that would be nearly the front page headline. But it's being passed by. Is it just an anomaly from your perspective and nothing to really dig into?
Yeah, I think, it is, in my belief, there is an anomaly. I think there is more effects that coming into that. Obviously, people are talking about more imports. Maybe there is a change of kind of a slate of crude oils that needs to be imported. It might be the year, the time of the year. It might be still kind of a knock-on effect on some of the hurricanes where, the refineries are only slowly coming back. So I wouldn't read too much into that unless it obviously repeats. And so
it's interesting that it wasn't in any way part of the forecasting, that something of that significant wasn't picked up by the major agencies who would be doing inventory forecasting.
Yeah. So the question is also, you need to look more deeply into the data. There's quite, there's also this element in all the data where they assume certain things or kind of, imply from other data. And the question is, and that could be some, quite significant, not to the tune of 15 million, but usually. But, you would get 1 million barrels in there. Sometimes you're not quite sure if that's what's going on, gets corrected the week after. But very clearly the market has read into it as something that is an anomaly and shouldn't go forward, because the price has certainly not fallen. Let's
go to the survey question, which sort of tackles the theme of Vandana's oil market immunity. Is immunity? Yeah. To the question of the day. And that is, have we got the survey question? There we go. With COVID responsible for 3,000 deaths yesterday in the US, and that is, by any imagination, a very large number of people, and financial markets still hitting records. The question is the COVID pandemic over as a restraint on the markets? Is the COVID pandemic over as a restraint on the markets? That's a question for everybody to think about. There's inevitably lots of caveats that one could go down, but just generally speaking, does your gut say the COVID pandemic is over as a restraint for the markets? Robin, there's a question on the chat room which I think is worth picking up on. I'm not sure if you're in a place to comment on it, but it is Egypt moving to hedge. We all know about Mexico as being the sort of biggest hedge in the world in the oil markets, but Egypt as well. Does that warrant any thought, do you think? Any impact?
Yeah, I mean, I hadn't seen this immediate story, Sean, but I know a while ago Egypt certainly looked at hedging, but their hedge was a bit different from Mexico's, at least then, assuming this is the same thing. I mean, really, the issue is, at least last time they looked, they had subsidized fuel sales, and that was obviously a big burden on their economy, and so they were looking to hedge in case of a rise in prices to protect them, to protect their budget against that. A couple of other countries have done that previously. Morocco has, I think Ghana has at some point. So that's not totally unheard of. So it's a bit different from the Mexico hedge, which is obviously about protecting the upstream, the oil export sales.
The other story that is out on our digest today, Robin, is comments by the Iranian president signaling that they're getting ready to increase exports in the second quarter, i.e. in the new year, the new Iranian New Year, which is around March. I'm wondering, obviously that depends a lot on the geopolitics, the Biden administration, but just on a technical level, is Iran able to ratchet up production, ratchet up exports that quickly in terms of its infrastructure?
Yeah, look, I think no doubt that Iran can regain production very, very quickly, as it did at the previous JCPOA when that came into effect. The fields have been shut down, it's pretty well known, so they shut them down in an orderly way. There may have been a bit of a decline of capacity, but given that Iran has lost so much export, so much of its export markets, yeah, it would be able to regain a lot of that quite quickly. Plus all of the oil in storage, they've consistently had 70 plus million barrels a day in floating storage and more onshore, which they would presumably put back on the market as fast as possible. So for Iran, it's all about access to markets and how strict the enforcement of sanctions is, and whether there's any waivers, and of course, obviously, a little bit longer term, whether there's negotiations and some kind of a new deal. Yeah, the technical ability to regain production is not in doubt.
Vladimir, we're now entering into what is traditionally, at least in the context of the West, a holiday season where everybody gets quite distracted from the markets and goes and enjoys some R&R. I'm wondering, what's your outlook for that on this occasion, given where the markets are at and where they're likely to travel in these coming days and weeks?
Yeah, I think, traditionally I always said kind of December is a half month for the markets. People kind of start wrapping up around the 15th. Just looking at the calendar, I mean, that's probably going to be a week later this year. And given that, at least the trading houses and kind of the trading organization, I think made quite a good money this year. Generally, there are exceptions, but generally I would expect people kind of go off risk for end of the year and just ride it out. So on the other hand, you might have the kind of freak occasions of the 29th and 30th of December where somebody moves to market with very little volumes. But I think people will want to kind of wrap it up and kind of see what's new in the new year, because they sit on a quite healthy P&Ls.
You would expect sort of low volumes as in the traditional window.
Yeah.
We will be being quite traditional and taking our break from this program for 2 weeks from this day next week, the 16th, I think it is. But let's get the survey result and give Vanda the last word on today. The survey says, what does the survey tell us? It doesn't tell us anything because it's not coming up. Irene went to the bathroom, maybe. I don't know. There it is. Oh my God. It tells us that it's more or less kind of a 50-50 job. Is COVID pandemic over as a restraint on the markets? 48 yes, 52% no. You get the last word, Vandana. That was the theme you put in the pod earlier. So what do you think of that result of that question?
Yeah, thank you for the last word, Sean. So until recently, well, starting with the euphoria, the vaccine euphoria, shall we call it, after the Pfizer announcement on the November 9th, until very recently, my view was that we're going to see a seesaw in the oil market. So we're going to have, on the one hand, positive news on vaccine. I mean, that's bound to happen, right? So the market is tracking the minutiae of the vaccine progress, regulatory approvals, rollouts, and so on. So there would be a seesaw between that. And then on the other hand, you would have the surge of COVID, the renewed restrictions. And of course, macroeconomic data is not going to be that good for November and possibly in January when we see the December data as well. However, I think I have now revised my opinion, and which ties in quite closely with your survey question. I think now that the market is now hopelessly rose-tinted glasses wearing. Oh gosh. Anyway, it's I think
it nearly sounds like an old Grease song. Hopelessly devoted.
Thank you. You do it much better than me. So I think I would be very surprised to see crude fall off in a big way from its current levels, which is not to say that there aren't any wild cards. I think it'll be good to remind ourselves that the vaccine, the whole world is an uncharted territory. Generally with the vaccines, all you need, unfortunately, I hope it doesn't happen, but all you need is some hiccups, some mishaps here and there, and the vaccine euphoria might just evaporate, even if temporarily.
Well, it's certainly one you would think to keep an eye on. You saw just posted there on the screen the announcement regarding the January 13th forum, which obviously we've been promoting and many of our regular commentators will be participating in. But the plan that for our January 13th Outlook for the Year forum, all of it will be produced on Zoom and will be accessible on Zoom, but it will also be broadcast onto LinkedIn. And so anybody that is interested can register to access it on LinkedIn. So we would encourage you to share that with your networks, that they can register to attend the forum on LinkedIn, open for everybody. There is no charge. So that's just a heads up to spread that, register on LinkedIn. But that's the end of the week here in the Middle East. Thank you, Vladimir. Thank you, Vandana in Singapore, and Robin here in Dubai. Wish you all a safe and enjoyable weekend. And I know it's not over for many of you, obviously in London or Singapore, but nonetheless, it comes to the end of our week. And we will be back here on Sunday with our regular commentators, Christoph Ruhl and Mike Muller. And on the note of Mike Muller, I wanted to also acknowledge that in his former place of employment, Shell, Ray promoted 3 women to the top trading jobs at Shell Trading, announced yesterday. And that is obviously well done to them. A great news. They're well deserving. And it's great for the industry to see that kind of diversity finally come to the top table. So congratulations to them. I don't even know who they are, but I think it's a good announcement. But thank you very much. All the best, everybody.
Thank you. Bye-bye.
Thanks, Sean. Thanks, everyone.